Stocks wobbling Tuesday with the indexes barely above break even, but is there a bubble in the offing? GameStop shooting up another 50% Tuesday after doubling intraday Monday. Who better to ask than Max Wolff of Systematic Ventures? He joins me now from his home in New York. Welcome back, Max.
Always a pleasure. Thanks so much for having me.
Great to have you with us. And earlier we saw, the rise of Bitcoin earlier this year. Now we're getting wild gyrations in stocks like GameStop, National Beverage. We've seen Bed Bath & Beyond, BlackBerry. Isolated short squeezes, or is this part of a bigger story?
No, we sort of have this little school of piranhas that's going around. And when the school of piranhas shows up, they're not the most finicky of eaters. And if you're in their way, they strip you to the bone, right? And we're seeing also a lot of coordination of these things on some of these websites. So you have a lot of new day traders who've kind of got a limited range of experience, and they get grouped up sometimes in these Reddits and subreddits and some other areas. But they get an idea, like really sort of getting heavy into the relatively thin options markets in some of these names, and they can do a short squeeze either on purpose in some cases or by accident pretty fast, right? And I think we're seeing a little bit of that. I think that's kind of a GameStop story, because the truth is it's hard to feel like people are buying physical cartridges more and more or hanging out in the malls because every piece of basic macro data that we kind of have mitigates in the opposite direction.
So the fact that we're seeing a lot of these stocks trade wildly, we've also seen just a flurry of tech IPOs of late. You've been rather skeptical of this rally all along. Are you sensing that we're nearing a top?
Yeah, so I think when we come out of the earnings seasons, I think we'll still see some good earnings numbers, right? I don't know if they're good enough to merit these prices, right? That's part of the story, but good by any standard metric, still pretty good story here. I don't know what the next catalyst is, right? Like, we're not getting another corporate tax rate because we're going to probably have to revisit whether that one we already have makes sense. We're not going to get a much larger stimulus, I don't think. We might get an infrastructure, so that part of the world might make some sense. But we've had a market that thinks all the old companies are probably going to be okay, and all the new companies are going to grow in a macro environment where there's negative to zero growth. And that just sort of doesn't work. That's the guys who used to eat a lot, the new guys eat a lot, and the pie is the same size or smaller. And at some point, that mathematics doesn't really work. To us, there are three big drivers that are almost wholly unacknowledged here, which is ultra low interest rates, massive upward wealth redistribution, and a sort of frenzied belief that prudence blocks profit.
So Max, when does the music stop? Right after earnings season?
I think we're going to be in for a rough patch after earnings season. I think if you make the rosiest possible set of assumptions, which the market has, eventually, first of all, the realities of a bumpier light road ahead come in. So I think we're going to have it's easy to see downside catalyst post earnings season. It's not so easy to see upside catalyst post earnings season. And that's not for every name, but for a lot of names.
So is it time for investors to sell now?
I'd take some money off the table. I think if you don't know why one of your companies is up, especially if it's up more than the overall markets and you still own it, you're probably doing something that won't look as good in the full light of hindsight. I mean, the old joke when I started my career was, if you ride the elevator all day, you get to see the penthouse, but you end up in the lobby. It's as important to know when to leave a position as it is important to know when to initiate a position.
Any particular sectors where you exit the elevator?
So look, I think long term you have to like big tech for a host of reasons. But short term, I don't know why people think it's so great to be heavily regulated as everyone becomes more nationalistic and your total addressable market shrinks. In the old days, when your ceiling was lowered on you and you became disliked when you used to be liked, we didn't see that as a buy signal.
All right, so perhaps lighten up on big tech. Thanks a lot, Max.
Thank you.
Our thanks to Max Wolff of Systematic Ventures in New York City. I'm Fred Katayama. This is Reuters.